Friends, and welcome to the Breakfast Club. It's the 20th of October 2025 and the year has flown by. It seemed like just yesterday we were talking about heading off to Thailand. Here we are a year later and we're heading back. Wow, it's just been a fast year. They say it goes faster and faster as you get older, so appreciate it while you can. Think about all the adventures we've been on this year so far. And this is going to be a big one right before Christmas, so I tweaked my back yesterday. Hopefully it's I'm hitting it with ice and ibuprofen and stuff, so I'm still getting around. But just before you go, you know, I don't want to sit on a 13-hour plane ride. It's going to be a nightmare. My back's going to be a mess. But, you know, there's people out there who got it worse. Poor Peter is still struggling to get back from a heavy-duty back surgery he's had. So, anyway, I hope he's doing well. Said about my thoughts and wishes to him. Hope his speedy recovery. Anyway, let's get into the charts here. Let's talk about something else other than listening to me babble on. Well, there's only me in here right now anyway, so that's good. So what I'm looking at, let's kind of go back from the daily chart here. So on the daily chart, I'm looking at the mean threshold of this candle, which hasn't been touched yet. So we'll see how we act inside there. Let's go down to the 4 hours to see how many confluences that we have that support that level. Seems to be the one that's hit the most right now. Those are the next upside 4 levels. But we need to break through this level right here. So this has become an area of importance for me. And that's 169 will be the top of this first 4-hour inversion. We've ran it already. We've stayed below it. And now we're starting to trade back into it. So I want to see this level provide support, it being a breaker and all. I'd like to see that provide a level of support before actually heading lower. Good morning, Adi. So I'm kind of looking at this area on the 4-hour chart. And they'll start hitting into our premium 4-hour level overall. and we still haven't broken this for these equal highs. We naturally think that we're heading for those equal highs, right? But I want to make sure that we've got all the PD arrays hit on the way first and confirmed, because this little run up here, I'll bet a lot of people were thinking we were heading for the highs when that happened, and then it just turned on us as soon as you hit this rejection area. So that little rejection zone, as it were, is where we kicked off last time. So now we're taking this wick and we're dividing it into quarters, and we've hit 75% of that wick already, and the bodies are still staying below 50%. So we're just trying to see how we act inside this candle, which is the first P1 premium. It's also inside that little rejection zone there, and it's also inside this last up wick. So I'm kind of looking to see if there's some sort of reversal here. So we're looking for a reversal on the hourly or 15-minute for a big rundown. We have a nice little discount box here. It's not even been hit yet. Nice discount here. Oh, this one was hit. This one hasn't been hit yet. All the rest have. So this would be just like it to turn around here, leave these relative equal highs, and then roll over and come back lower. So in order to see that, we want to see this broken to the downside. It has, and now we're seeing it get. We'll see where this hour ends, but if this hour ends above this level, then we're looking for a range extension and perhaps a continuation, or just a range extension over this high. Running for these relative equal highs puts us in the mean threshold of the daily, and obviously inside some other higher time frame objectives like the 4-hour. Good morning, Derek. How are you doing? Thank you very much, Adi. Do I feel as bad as I sound? I think we got a little bit of a airplane bug on the way back. My wife and I both sound like we got colds and stuff. So I just thought it was that Barry White kind of good morning, everybody. You get a little bit of morning macho voice this morning. So that's the hourly. The hourly, I'm seeing a turn right here already, but I have not seen a market structure shift yet here. All I've just seen is a turn inside a very small range. So we're going to see how we got to get below here if we're looking for a swing opportunity. I'd like to see it get below here, or if we come up and then break this and use this and this as support to come lower, I'll be targeting this imbalance, or this was the new week opening gap from this weekend. All right, just turn that on, you'll see it sitting right there. Lots of overlapping arrays. We got the daily sitting right in here, and the last up close candles, mean threshold, its wick. It's been reacting off that. So as we start to dig down deeper into some lower time frames, you'll start to see if there's a reversal or something reacting off this mean threshold or consequent encroachment. I guess you could take also the lowest down or lowest swing here. You can take that whole wick, puts us right into this new day opening gap that's overlapping. We just came back inside that weekly. We haven't broke through that yet. So I think we're going to get on the other side of this weekly, the week opening gap, use it as support, start pushing lower. Or we got to get through this mean threshold of this candle, start looking for range extension, and then continuation off the top of this. So it's a kind of a no-fly zone for me this morning. So looking at that large range we're in, we've only retested this SIBI here once. Got a range extension, continuation, or new range extension, and a continuation. We've had no real reversal here except for this little imbalance right here. It's a little volume imbalance. We trade it through that, take out the low. Body takes out the low, trades back into it. Range extension. Tight. There's a tight little zones in there. Yeah, even on a 15-minute chart, this is pretty tight. Still like some more upside right now. I don't see anything plummeting for a downside just yet. Good morning, JP. Oh, when we flew home from San Diego last year, my first run in with COVID, it was nasty. Yeah, it's just a whole bug central. And I was like right at the front of the plane, so I didn't have anybody in front of me. But I had that fan just blowing on me all the time, and they're just recirculating. So all the people in the back were coughing, and I got to be the first one up front that got the receiving end of it. Yeah, it was crazy. But I get to sit next to this guy who had a service dog with him. She was so cute. Oh, she was so cute. She had one blue eye, one brown eye. And what a beautiful dog. In the middle of the flight, she just starts barking. He's like, what? What's going on? But yeah, sweetheart of a dog. Just so cute. He gets on and goes, do you mind dogs? I'm like, are you kidding? I love dogs. So yeah, she was a sweetheart. I turn my fan on. All right. There's so much paperwork. You got to fill out some paperwork too everywhere now. There's I think just recently Thailand's just released this video or this you have to get one of those digital arrival cards. A digital Thailand arrival card. So somebody's attached to your name as you come into the country. So far, they're not charging to enter the country, which is kind of nice. Anyway, this is the 15-minute chart. Don't see anything major going on here yet. We may see a retrace back into these old highs here. And these last two up close candles first before running higher. If it's got an intent to get up there, again, we're still looking for that confluences that overlap this area here. So still looking for more upside. Oops, let's do a 5-minute chart. Let's see where we're sitting in here. See if we can come back and retest this new day opening gap from a previous day and get back inside this midnight open range here. It's interesting how they use that midnight. Yeah, look how much they've used it from above, from below. Finally broke through it. There's nothing really up here. Our next little bull trap. I just want to say it was a great experience seeing those guys out, and Reza, Russell, and Hadi. It was great seeing those guys in Toronto having our little trade summit. We just kind of occupy the lobby of our hotel. We sat there for hours, like all day. They came there in the morning after the show and then didn't leave till supper time. It was crazy. We had a great time. It's nice finding people you can just chat with about something you're passionate about, like charts and that. So, and you get to meet new people that are excited about learning it as well. So it was awesome. We may be coming to North Carolina next year, so that'll be Derek's stomping grounds. My wife's applied for some. We even do. I think she's even applied for Texas and Colorado. Even one in Illinois as well. So we'll see how that goes next year. Yeah, it was great. We had lots of good learnings going on there. I get so excited. I just love showing what I know. That's all. It's not the be-all, end-all by any stretch, but there's some pretty sound logic there. All right, I don't see much here on the 5-minute other than the fact that we're in this larger range right here, and there's really nothing on the upside to target except for this mean threshold, this whole kind of cluster right here. I'm going to put a couple of little lines in here and see how we act off of them. Are you doing exercises with your back, or is it too early? I got up yesterday and I started rolling. Like, I came right downstairs and started rolling. Probably not the best thing to do. It's like you're just starting to crush your muscles, so you got to try and warm them up first. I think is what I did wrong. And then went upstairs, had a shower, get up, and then I bent over to kind of just start toweling off, and I felt this little pop, and I was like, well, it didn't really hurt. It was just like a pop, and then I could just feel it, a big ball growing in there. I thought, oh, I've torn something in there, and then it just became this big knot. You get the size of, I guess like that big around. It just felt like a little ball. I was like, oh, I better get some ice on that. So I hit it with some ice, and it just started stiffening up and getting sore and sore. the more I went, so I must have just irritated the snot out of it by going straight to rolling in the morning. I should have warmed up first. So nothing, and I haven't worked out since everybody was here over the summer and everything got kind of thrown up. I tried to do a little bit of swimming at night, but again, now you get this wedding and everything just kind of takes me off my schedule. I need to have a nice routine. So I do prefer a nice routine. Which sounds kind of crazy as a medic, because there's nothing routine about being a paramedic. You get as much sleep as you can when you can, and then it's chaos. And then it calms down just long enough for you to fill out your paperwork, and then it's back to chaos again. Yeah, New York, Toronto are about the same distance for me, I think. 6.5 hours to Charlottesville, North Carolina, and 7.5 to Toronto. Is it really? Whereabouts in North Carolina are you? 7 hours? I thought you were in North Carolina, Derek. Oh, it's a drive, you mean? It must be a drive, because 6 hours to get across the country. Oh, Pennsylvania. Oh, there you go. I'll have to get her to look for some schools in Pennsylvania. It's 2 private schools. She's down in Toronto now, and just amazing how those people are really, really up on the IB. They're very smart. They're very put together. Teachers are very passionate about their job. The kids love it there. It's nice to be in a school where you have kids that are eager to learn. There are teachers that are excited about teaching, and they're very passionate about it. Put in a lot of their personal time, which is what teachers do. Mine not only put her personal time in, she put money in. Anytime a kid used to talk about, she loved this book, she'd always go to the library to check, see if they had it, and if they didn't, she'd order it in. Out of her own pocket, she'd order it in and pay for it. Make sure the kid had it. As soon as she could, she'd be so excited about bringing the book into the school or buy a series of books. I'd be like, you're giving away your wages just in books and stuff. I'd be sitting here, also, ding dong, the doorbell's ringing. She's ordered something new for the kids. My wife definitely had no problem about teaching and watching kids' little minds grow. It was great to see her that enthusiastic about her job. So anyway, Pennsylvania. We'll get together, Derek. Our day will come. Even if we just make it a purposeful trip just to come down there and see you. Derek's been with me since the beginning. So there's the first level. See how sensitive, well, just see if that's a sensitive level there. That's pretty much the mean threshold of all those up close candles. If you add them all together, that's the mean threshold right there. And on the 5th day, God created the internet and placed ThetaWaveTrader and Derek in a YouTube group together. And all was good. All was good. I remember starting 2 years ago. Remember when we used to do Joseph? Some guy named Joseph. I used to let him take over my show every once in a while. He explained stuff, and I'm like, well, and he was excited about pointing out specific levels. He was an engineer, so he had a lot of specificity. Wow. I was definitely in my early stages there, just allowing somebody to take over the show and start teaching what he saw. And I'm like, no, I have to stick with what I know. That's been one of the hardest parts, is about stick to what you know and follow through. Just stay on what you know. And all the time you get things proved, your method is proved wrong, then find new ways to tweak it, new ways to improve it using these ICT principles. But stick to one thing until you get really comfortable with it. And once you got that one thing, start exploring other things if that's what you're interested in. But if you have a method that works for you, hold it, stick to it. And adding more stuff to it just for the sake of adding more trades and more potential risk when you've already proven something out for yourself, it's a lot to take on, especially if it starts to conflict with some of the stuff that you already do, right? It's a very personal thing to get your own trading style. It's very personal to get your own thoughts on trading. You know, to share those with other people and other people to accept them, that's a whole new thing. It's a level of respect. I really appreciate you guys spending time with me and just hearing me babble about the same thing over and over again, right? So hopefully it doesn't conflict too much with your way of looking at the charts. So now we're looking to see how that level was a close right on it, open right on it, and I'll leave. So despite all these candles, that mean threshold was a data point. So we're looking at the larger candle. So now I'm looking at this last one to see if this last data point is important, or they're just going to ignore it and run right through it. Like they've done that on the larger one. And they're going to run right to the rejection block next, half the wick, then the high. So we'll see what kind of reaction we get off of here. Yeah, they're just kind of rolling. See how we're just kind of rolling right through it. We did this one, froze on it, popped through here. There's nothing really to pop through for except for this rejection block first. And then the 152.50 or 153 Hadid. Top of the 4 hours, 174, then 184. 215 is the 4-hour order block. This is the 4-hour level I had. The 265. We got 224, 184. $215 is 4-hour order block. What are you looking at there? Well, you're looking at this here. Yeah, that's where you got to kind of take your fib tool here, take this last wicky candle here. You're looking at hunting out some other data points. See how we only came 25% into that last time? So a full 50% of it will put us right at or near, just above here, and right near the consequent encroachment of that hourly level we looked for all the candles. That last up close candles mean threshold. Oh, that was right over here. This is, what is this one? Stand by. Oh, that was the daily, was it not? Yes, the daily fair value gap. Sorry, the daily mean threshold. So we're deep inside the hourly wick now, the 4-hour wick. 183. $171 is the top of the rejection zone. So I want to see if that. I'm going to take this here. I'm going to mark each one of these arrays out that you want to step on and see if it still goes higher. This one doesn't seem to be interested. So you're looking for this one, then get up on top of this one, and then I'm hunting for this guy up here, 170. $170, big figure. So always keep in mind, every time we have a new fair value gap forming above old highs, creating its new range, we have nothing, no BISI to retrace back into. It seems more like it's been worked quite well throughout this whole area. We have a market structure shift. We have not come back into this area. There's your fair value gap that forms above old highs. A plus kind of just up and left right away. Graded response, it just left with the intention of, I'm not coming back here. I've got other objectives. And these, there's nothing on this side except this little imbalance right here. We rip right through that, no problem. Didn't even come back and retest it. So we're clearly looking for a run on these highs. There was no entry above this level. Clean entry on a 5-minute, maybe a 1 minute or a 15-second chart. You would have seen something. In terms of this SIBI, was the only opportunity other than this one here. We traded above it, came back inside it, put a call along there at 7:45 this morning, aiming for targeting internal range liquidity. You were targeted this zone. Once you break that on a body, you come back inside it, all inside this. You have to include all of it because it's attached. So as soon as you break that high right there, trade back into it. That's your long for a range extension. And then the continuation was right there, A plus left. So from what we were talking about this morning or on the other day, Russell and Reza, that's the range extension A plus setup. Now, a lot of people don't go with an A plus. They wait for at least an A or a B level entry for going higher, but that's your A plus with intention. And there's nothing else up here except the mean threshold, which we've already violated. So we're looking for a continuation. A range extension, I should say, and then a continuation. So the same kind of setup that we see right here, we're looking for that above this high here for continuation to the upside. So you're looking for any entry that creates a BISI above this area. Come back, use the BISI as an institutional order flow entry drill to be, hopefully a B lines us up right with this level right here and goes higher. Let's have a look at some of the other stuff we're dealing with this morning. This one's been tagged, this one's been tagged, this one's been tagged, and we're tagging it from above for a range extension. There's your range extension. You want to see that just start extending up above here now. Pay yourself a rejection block so you don't get the old high just yet. But you don't want to see it trade back through that level there. So we have to take a run. We have to get back above this level here and then look for a market structure shift. And then I'd like to see that really start pushing through if we're going to go higher. Lots of open room above you. Got to get up on top of these two levels first before I see that. Four-hour target. 4-hour rejection zone. I'm going to put this in there. This is right in the 4-hour overlap rejection zone and this premium array. Let's look at this oil price here. Looking for Dow Jones to reach up into here. Get up on top of that. Look for around the highs. Let's look at what oil's up to here. Craig would be chomping at the bit for this stuff. Oil taking a big dive here. What is going on the daily? Let's have a look at oil on the daily here. Look for this little object right here. We'll see if this little area holds here and see if we can get some sort of response off of that. We'd have to see a market structure shift for me. Get above here. Let's start targeting this new week opening gap again. It's a beautiful thing when you see it over and over and over again. In all time frames, all asset classes, when you see it, it's a beautiful thing. It really is. And it's such a repetitive thing. And you think about it, Bitcoin just dropped from like 124,000 from way up here. And then just dropped like 20 grand. And now we're starting to get a reversal. Consolidation, cat model 1, 2, and 3. It would be a 3 down here if we retraced. You got a cat model 1, continuation, take out the high. Discount doesn't get hit. The turn right here, first order block to the left. Whereas you remember when we were talking about this, you look for that fair value gap. Look for the very first candles of the left. We break that to the upside, look for the premium raise. Break it to the upside, come back, use its mean threshold. Look at that right there, mean threshold of that candle. Line in the sand, runs higher, right through your premium raise, and then you get your fair value gap occurring above it. Institutional order flow entry drill. Yes, that's a level entry right there for continuation. How many people wanted to see that come all the way back down into here? A level keeps running higher. So far we've got no reversal until here. Trace back up into it. Now we're rolling over and taking out that low. looking for a retest of 110.816 and for a continuation lower. I'd like to see it come back up, hit that line, roll over, and come back. You can get a wick up to 110.908. Then I want to see it come back lower. Start exploring this candle again. It's high, open, and mean threshold. So that level there is the next downside target. It's like a little breaker. Takes out this high. It's a swing point. Let's have a look at the oh, look at that. It's almost $1 higher on the pre-market. Somebody scooped up a deal here this weekend or on what, Friday? Gold. Friday afternoon. I don't know if Reza's here. You can hear this or not. But remember when I was telling you about these highs get broken and the last up, those candles mean threshold becomes important if you trade through it looking for a run down deeper into the untapped stuff. Or you know that's not going to hold. We get a body through it. It usually comes back and tests it again. So we'll watch this level right here. So we trade through it, back to it, kept coming lower. Last up close candle. It's the highest up close candle in this group. Look at that, right to the pip. See change in direction. Come back, retest this BISI. Watch these highs get broken. Right here, come back inside that, and we don't want any more than the mean threshold of that candle to get taken. And it doesn't. So that's support, institutional order flow entry drill, all the way down to a B level trade, I think that is. Nope, that's at A level. Institutional order flow entry drill right off that high. Leave a portion open, run higher. You get these little premium levels here. Inside that larger range, mean threshold, broken, range extension, right there. Rejection block. Change in direction right here, old high taken, retest, go lower, take the low, wait for a body to get above here. Body trades above it, comes back into the range more than 50%. So you got to get a body above that high. They close right on top of it. Take out the low, retest the low. Sorry, this SIBI here. Trade below it, come back, test it, extend it, rip the range. Wait for this to get taken. It does all in one candle. Takes out the high, comes back, retests it, looking for range extension. Pop just above it here. Rejection block again. Take out the low. You don't get a chance to retest it here. Look for this zone to come back, get traded through. So looking for a range extension below this level. It actually extends before you get a chance to get it on it. Then it hits it. So you want to see that level hold as a rejection zone, as it were. You want to still see it reject off of that. If it doesn't, then it becomes that little support for continuation to the upside. Retests it, push lower, next objective, and then the final objective down here. That becomes the rejection zone. Rejects right off of it, goes lower, takes this guy right here. Nice. Same stuff we've been teaching all weekend, you guys, when we were there. Over the week, a few days that we were there last week, that's exactly the same thing that's been happening. So everything we talked about on the weekend, manifesting very clearly in here. If you really focus on the charts, you'll still see it sitting in there. Remember we were talking about government bonds going down? We said it was algorithmically driven. There you go. That's the down we called back in the beginning of October. I don't know who gave me the U.S. bonds. I don't remember who it was we were discussing with. We said this was our targeting. We were targeting this. Wanted to see support off of that. Come lower. We're targeting this. We've hit that last week. Now, still want to see this continue going lower now. Thing is, we can retrace all the way back inside this range. You don't want to see a market structure shift unless you want to see bonds go higher. But I think we were talking about this at the beginning of October. It ran back up inside the range. %. Tag the old lows. And now we ran out this low here. So I want to see this support price and keep extension, range extension now. Looking for this mean threshold of the weekly order block. Was it you that wanted that, Hans? So far it's manifesting the way we talked about it. So there's the bond market. Wow, the price of soybeans suddenly shot up, hey? They didn't have a buyers in their market, like China wasn't buying soybeans. Then all of a sudden, we just had a $3 jump since Friday. Looking here for a reversal to target this old high, consequent encroachment. Look how this kind of pans out here. I'm going to go like this. See how that consequent encroachment of that lines up with that old high? So if you're looking for this to retrace back down into 50% of that, that's what you want to see. Soybeans. Let's look at some of these crypto jobbies here. So Reza, you see how we've traded below here? Large, highest up close candles, mean threshold. You trade through it. So we didn't want to see it get below there. It did. Came back into it, give you an opportunity to get out of your trade and wait for a market structure shift or a deeper dive back into this range. The very first candle to the left, see how its mean threshold has been traded through as well. So far, they got this little tiny Cibi sitting right here. This mean threshold, last down close candle. Its mean threshold is holding. Now we've got this run above, so I'll expect to see this tap and then run higher. We want to see if it gets above. Is that an up close candle? Nope. I want to see it get above here before running higher. Right now, you got to change your direction right here. See how it acts inside this chop here. Not super clean right now for euro. Pound, you want to see pound get back above 134.91 on a close, and then start targeting 135.86. Euro is the sixth sister of the two. We're still inside this range right now. Gotta see it break out on top of here. A nice big bold candle. Still paying some screaming deals, man. See, some of the markets are just respecting those seasonal tendencies so well. Does anybody know how to get this off of TradingView? All this crap here, why this split the screen? Anybody know how you can get rid of that? Is there like a button or something, a layer I've put in here that I shouldn't have? Overlapping labels. Not sure. If anybody knows how to get rid of that, just let me know. What's going on here? Bank of Nova Scotia, 6,000. Nothing's going on there yet. This is big wake up, collect some more liquidity above the market here, and then just dropping it. See what we get like down here. So I can see what the DAX is up to. In case our boy Ali is here. We've hit right there now, 24,236. It's right on the last line. 24,236. See if it gets it back up on top of here, Ali, and then look for a run higher, take out the highs. And then you want to see it continually run. See how it acts on top of there right now. So far, to see if Disney's going to watch this spot right here for support or resistance and then start running back down. We've already ran the lows out here. We're back into this first gap here. We're above it, below it. You got to wait for a structure shift here. What's our silver friend like here? Oof, look at that. We hit our 4 standard deviations. Hit them right back to 3. So I want to see if this holds now. So we hit right off the levels we were looking for in silver, all the way up to, remember that little fiddling around one we had back here? Or was it in here? That's right, in July and August. We wanted to see this hold for continuation. We just ran all the way back down, took out the lows, changed the direction, came back, support inside that, broke higher, candle traded above it, came back into the mean threshold of this candle, right there, extended, premiums taken on the upside. Come back, you don't even tag that high. Next one, institutional order flow entry drill. Albeit sticking around in there for a while. Use the last down close candle. Didn't get a body break through the mean threshold. Change direction, create a new high. Institutional order flow entry drill. Continue pushing higher. Finally hit our 3 and 4 standard deviations. Nice. $53. We called it from way back here. Nice. Anyway, let's get back to the regularly scheduled program. There's 220. That's right in the middle of the consequence encroachment of that 4-hour block. Good morning. Morning, Russell. The consolidation ends with an explosive move at one point. Unpredictable for sure. I want natural gas to explode another $5 or $10. And that will close my portfolio down for the rest of the year. Edgar, buenos dias. Buenos dias, Edgar. Buenos dias. I like the US. So yeah, we talked about that. Took full wick of the daily bar now. So looking at your 4-hour chart, there's P1, P2, P3. So we're hitting the consequent encroachment of that. We still have this gigantic SIBI that's never been filled yet from way back down here. We still have yet to fill that. And the part that's in the discount is this little piece right here. He's bouncing off of that. You just get a wick drop into the consequent encroachment of this 4-hour border block. Also the same level Hadid's looking for right here is the body. Now you want to see this hold here and start looking for a reversal. So take a look at the 15-minute. There's nothing on there yet. 5-minute. Nothing on a 5-minute. So far, if you're looking for a continuation, you've got the fair value gap forming. That's your A plus takeoff. No institutional order flow entry drill yet. Remember, we're looking for this level to be the midpoint. There. 75% will put us right. Yeah, 75 will put us right on there. Though we'll leave that small little portion open. That's a C level response. A, B, C, D is a full fill. A plus is just leave from here. Still going to go higher. And we got lots more to go for, reach for yet. Good morning, Kevin. Back's a little sore this morning. It's a little sore this morning. I hope it loosens it off in the next couple of days. Well, I've got till we'll be doing our show till tomorrow. I guess we're leaving tomorrow. So is it tomorrow? No, 22nd. Yeah. Wednesday is the last show. The last show. I may do another one when I'm overseas there, but not promising anything right now. But or Wednesday will be the last show until December at least. Michael usually shuts down right after Thanksgiving and then doesn't come back till late January or even the first week of February, depending on what he sees in the markets. So keep your leverage and your study of price action. Don't over commit to too much. And kind of just watch where things go. As you get into December, the markets can be kind of choppy. Sometimes they can just tear right through, but October, November, we expected to see a swing point in October. There's your swing. If this is the continuation, we get a run higher. It's been atypical this year. Markets are still driving. I tell you, this just looks like it's ready for a drop. Everybody's been saying it for years. Everybody's anticipating a big drop, and it just keeps climbing higher. It's like, how far can you stretch that balloon before it bursts and drops dramatically? Then people start hunting who's the greedy sod that popped the balloon. But anyway. So if we do get a retest, high, mean threshold, puts you right on top of this breaker here. Takes out this low. Takes out this low. So this breaker is going to become the important thing on a 4-hour level to see whether or not it provides a level of support to drive higher. You got lots of liquidity sitting up here. So you got shorts down here or longs down here, shorts right here. So if you pair them up with these folks here, we could see a run of liquidity above this level, but we're going to see these 4 hours give way and see how much they provide some support at specific levels. So I'm watching right here to see if we can get a support off of that level. So if we come back into 25% of this wick, old high, half the wick, open. This is what we're drawing out for you, Russell and Rez, the other day. The wicks all have their own little PD rays inside them. So keep those in mind and see what levels you want to see provide support or weakness. And what would be the next target? If you're looking at this range we're in an extremely premium portion of this range and an extreme portion of this range here. It's created its new range. So if we get another little pop up with a fair value gap that forms in here, Then now that high has been taken out. I'm looking for this to roll over and come down below that level, but it's got more climbing to do yet. So it's not done yet going higher, folks. Just hang in there. Hunt and wait for your opportunity. Yes, exactly. ES has 4 hours hit as well above you. There's the hourly you're climbing through right now. So if you get back on top of this, find support inside here, look for a range extension, which we're getting here. Then you want to see this candles divided into quarters and see if you get resistance. We've already hit the rejection block already. Get a nice little fair value gap for me above here. Break above there as well. If it doesn't, look for this one here. That's nice. Targeting this area up here at 4 hours in ES. And we ain't done going higher. See how that new day or that daily mean threshold? Let's see where that daily mean threshold is right here. Looking at this candle here now, we've traded above it. Looking at its levels to see how well they're holding price. So Reza, when we drew those out inside your book there, look at those support levels. There's like 13, I think it's like 13 levels we're looking at in one candle. And how we attack a candle, whether we're on top of it or we're on the bottom of it, when you expect to see it attacked and when it's not valid yet, and when it gets validated, all that kind of stuff. Tag high, new high. Still looking for this SIBI to fill. And on top of our 5-minute zone here, as soon as we come back to fill this SIBI, look for this little reversal zone right there. It never got a chance to get hit, so I'll be looking for something in here for a 5-minute. I'm going to take that whole thing right there. It's to fall right inside our 4-hour zone as well. So looking up here now. Bottom of the hour, Crazy Ivan. If he sees you, he's coming for you. Crazy Ivan. Still looking higher. Top step is down. Yes, is it a sign? Is it a sign something's going on? They're seeing something we don't see. Now we're going to look for any sign of a reversal. So there's nothing in here yet until we break this market structure or get through here. So let's go to a 1-minute chart and see what we can find on there. We want to catch this. If this does a quick reversal on us, we want to see if we can catch it early. So there's Monday's first presentation of our value gap. We've traded above it. We've come back to it. Range extension. We've got nothing other than this little imbalance right here. We've traded through it. We're back inside it looking for a lower prices. And there's another little imbalance right here. And yes, you have to take into consideration all of these. You discount them or ignore them, it's at your own peril. Here to here, this is already well into the discount zone or discount portion of this range. So in terms of an internal range liquidity hunt, you're getting into the premium level. As soon as we traded through this, trade back to this, trade to 62%, pay yourself. See 50, 62%. You see how that would have worked, Russell? Right here, you've gone down, back up, stop. Pay yourself to 62 in this candle here. See how you ran? There's your little new premium box, another new premium box. You trade back to it. Ran to 62, so you pay yourself at 50, move to break even, take half your trade off, take 60% of your trade off, and the rest goes out there. And now you wait. That's an internal range liquidity hunt. If you do a trade profit model 2, you never would have made your internal range. You wouldn't have got it. That's why take profit model 1 is a great little money maker. So we've traded back into here. See how the bodies are respecting it. Bit of wick action. So if we start closing above that, then we're running higher. We start taking this out. We're looking for this level down here. It's now 10 a.m. So even if you're on the wrong side of this and it starts to go higher, that's the level you want to see get taken on the upside. Rejection block. Even the fact that you're running through there with wicks, it's sloppy price action for me with all those wicks. But if the body gets above here, comes back and finds support at that level, you'll see a big sloppy wick come down into here and maybe even extend through it. But I expect to see this little level here get a little retest. 8 seconds, 7 seconds. This little break here, we've broken below it. You want to see it provide support, go lower, or reclaim it and go higher. There's the mean threshold of it. Just shy of coming back and filling that in. You'll get a sloppy wick come back there. So far this is holding. See, you get a little pop above here. This becomes padding now for continuation. Not valid yet. There you go. Tippy tappy. Now see if we get through it. Back inside this range. It's high. It's open. Mean threshold. We're looking for all the three of those. There's the mean threshold. See if that holds. Price 2-1. Start a new candle. So now you don't want to see more than half this wick. So we run through this level again. You run above it, run through it. Now if you run above it again, you wait for market structure shift. That's just too sloppy. So wait for this to pop up above this level here. Don't forget, we're still expecting more upside. We've still got all this up here to aim for yet. I know that's still my zone I want to see get rejected off of. So I'm looking for a reversal up in here. Body's above there. We may see a quick tap and go. $229. Keep your eye on 229. That's really aggressive. Just leave right there. You've got the high already. You've got the tap. You're above this candle. You've retested it. You can go. Anybody want me to zoom out to a specific time frame you're looking at? Looking for support resistance levels where you expect to see price. Right now, the 1 minute level, we're still expecting, obviously, to go reaching for higher objectives. I don't see anything in terms of a market structure shift, just bouncing around back and forth in between these ranges. You come back to the discount portion, create a new range, come back inside this small little swing point here, mean threshold, extending the range even higher now. I'm looking for these two down close candles to provide a level of support, plus this little rejection block here. Not rejection block, mitigation block. It didn't take out any low, so last up close candle. Got an overlap of a breaker, takes out this low. This mitigation block that doesn't. So I want to see that hold. Keep pushing higher. That's valid now. So this is like a padding. I want you to see this act like a propulsion candle now. I want to see that propel price higher. Right there. Start going higher. Take out that high. It's a 7 candle. 910, expect a 910 turn. There's the high. Funny how Reza, when we're talking about that level, look at how precise it is. Takes out the high. It's exactly what we're talking about in Toronto. High taken. Reza's not even with us this morning, is he? No, you got left is this mean threshold. Still no change in direction. So looking inside this range, all I've got is this little imbalance down here. Everything else has been rebalanced right away. So looking at this candle, if we lose the mean threshold of that candle and close below here, then I'm back inside this range and I'm looking at consequent encroachment of this wick. The open of both of those candles is 228, and then the mean threshold of those, which will probably be right around this mean threshold of the 4 hour again. So I want to see this get on top of this candle here now, validated. It's not valid yet. Now, is it almost? I guess he considers it valid from here, but I like to see a wick or a body get above here just to kind of now act as all these little rays will suddenly become active. They're not active just yet, so I want to see them active like this one here. See how we wicked above it? That's still activating that candle. We've come back into it. Went higher, extended. We're looking for a range extension here. We got equal highs. So I don't want to see us close below here. Otherwise, we're back inside that range again. And then this candle becomes important. Watch the mean threshold here. $16 seconds. Watch where it closes. Remember, this is the psych candle. I call it a psych candle because it'll psych you out. You think, oh, it's going lower. Then all of a sudden it turns into a wick, and you see it ended a bull candle, and you, ugh, it'll throw you off. You don't trade that candle unless you're looking for a precise entry. So the body is staying above this level. Bit of wick damage, clean out the little liquidity here, internal range of liquidity. 50%. Next thing is look for the wick, half the wick. You can go higher from here. Retag the wick. Half the wick, then the body. There's the body. So now these two are in battle with one another. Who's going to give up the ghost? You want to see this mean threshold get traded through? And then we look at this candle as like a support candle. Just watch. If a body gets above here, I want to see this mean threshold give way. Otherwise, we're still back inside this range. I want to see that mean threshold pop and create this little swing low. Get a body above here, preferably a fair value gap above that. And then we'll watch for a continuation. Unfortunately, there's no range extension continuation. Res, and I don't know if Res is in here, when we're talking about when there's no premium and discount boxes inside small ranges, we have to use the breakers. Or the highest up closed candle, lowest down closed candle as my support and resistance, so to speak. I know we hate the word support and resistance, but so it's holding. No mean threshold through there yet. So we'll see if these two, who loses the battle, we can run deeper back into this one. This one hasn't even been tagged yet. It's open, hasn't been tagged, and the mean threshold hasn't been tagged. So you want to see that provide some support. Hold price back. So this guy's trying to hold this lot back, this little onslaught. And if that loses, then look for a deeper run back into these two candles. So we filled that 254. This 4-hour level's been hit now. Oh no, there's still a little tad bit more. 254, and we're at 253. So we've got one more handle to fill this SIBI. So far we're getting a big pull off of one handle left. There's nothing on a 5 minute. 15 minutes got nothing. Hourly. Still got more to reach for on the upside. 1 minute. Finally broke this level. Wait and see where that closes. See we come all the way back down to the deeper part of that range. That one gave up the ghost. We're digging into this. Once again, that's all we've got down here. So this you want to see provide support. So if you're looking for this rollover to continue, which doesn't make much sense in terms of we're already above the 75% level of the 4-hour inversion. See how those levels become sensitive? 50%, 75%, banging around up above and below it. Back to 50. Now I want to see us run back above here. Because if I take 50% sitting right on there, so this is the premium portion of the BISI, and further split into premium discount of the premium. Losing the mean threshold here. If we can get below this here now, you got to wait for market structure shift. And I would wait for this to get taken before considering some sort of low. And you want to see a nice little pop through here. SIBI forming below that low. Then institutional order flow entry drill. Wait for this structure to get broken first, and because these are overlapping so much, I'd wait for this, and then you got this overlap. So here's your breaker. This is more like mitigation block, doesn't take out that high. This would be the breaker that takes that high. So you want to see a structure shift here. Nothing yet. Just wait. Just wait. Watch it. This could set us up into a nice little Tuesday reversal, or later on today. Monday, Tuesday of the high of the week. So regular trading hour gap sitting right here. Hans does love the regular trading hour gap. Is that one of your regular setups, Hans? Is to target that regular trading hour gap? I think that's typically what he likes to hunt for. You almost want to see it get below this regular trade, this first presentation fair value gap again, and use it as support to come lower. There's our little imbalance. There is. So of the larger range, the discount is here. Premium is here. Oh, there's one right there. I didn't see that there. Market structure shift yet. Give you good squeeze, but nothing yet. Okay, so we've got this one traded above here. We've got a low taken. First SIBI you see happens to be in an extreme premium of this small range. So this is where you typically want to see a BISI pop through, like a discount down here, and then a BISI up here. You can try to trade back into it to go higher. In this case, it's the first SIBI after taking that low. And that breaker you got right there, you want to see a nice big trade above here now. You want to see this act as support. And even the first candle to the left of it, you want to see that get taken. And so far, this acted like a bull trap. Retest old high. Well, it's not an old high, really. There's no swing point there. This just drove back in. Now that we traded above it, we've traded all the way back inside it. You can see that extend higher. There is so indeed many options to choose from. So looking for a continuation now. We've got this swing. We've seen this low taken out. This small little low here, it's taken out. We got a SIBI, traded back into it. We've traded above it, trade back into it. Now I want to see this act as support and then use that as support to go higher. Now ideally you want to see a SIBI or a BISI form above here now. And only a portion of it, only a portion of it get used to continue going higher. Your graded response will occur once you get a body above here. Oil is still dropping. How's our ES doing? ES has finally broke through that upside objective we're looking for. Now you want to see a rollover and give this. I'd like to see this level right here. Get retested before taking that high. %50 there. Unless it's just hitting driving like a bullet, get through here, find some support above there, and then start reaching in for the next 4-hour target, because we have a lot of liquidity sitting up there. Bitcoin came down and tagged that area we're looking at here. We want to see it get back above this candle, reclaim it. I want to see that level right there get traded back above, come back, reclaim it, and then start pushing higher. You got to put a little motivation in there, I think. Put a little carrot right there. Carrot and a stick, man. Carrot and a stick. Gold. What's gold up to? Market structure shift here. Market structure shift here. If we trade through this mean threshold on a close, that's a retest. On a close, look for a run deeper into here. Then look for a retag of this high. If we lose the mean threshold of that candle, look for a deeper run down into here. So you want to see this hold. So the stop loss would be like just below the tick below here. If you lose the mean threshold, take your trade out. Like enter, you could enter in right there. Then if it trades through it and back to it, close it out, wait for lower discount rate to get hit. Like for a run deeper into this range. So 50% of that range would put you back in this order block here. This little breaker takes out that low. If we lose the mean threshold, so institutional order flow entry drill continuation. So if you looked at this here and you said, I want to see a body break above here and then use this as support to go higher, or if it creates a fair value gap, we have a range extension. There's your A level trade for a continuation on the upside. So now once it's broken above there, you want to say to yourself, I don't want to see it come back down into here. So with your entry here, you want to put your stop loss there. You don't want to see that come back down. If that's aggressive, it should take you all the way up. If it comes back down and revisits that again, then not for, it shouldn't come back down into there. So once that one closes, whatever that wick is there, you don't want to see that get eaten through. If this isn't the low that you're looking for, then we're going to start attacking this candle, very first candle here to the left. Its mean threshold, which is 336. So that should hold and go higher. Coffee's right in our premium box right now. See how, look at how precise that is. Absolutely awesome. A boom. Look at that. Isn't that a nice entry? We want a continuation. You got continuation. That's 40 more handles right there in 5 minutes. Yeah, we got lots of busies here now. That level held. Good extension, extension, extension. Look at that. Refill. Keep coming higher now. There's the higher. There's a range extension. So that fills, hold. Range extends. Crazy Ivan. Con sonar. Crazy Ivan. On gold, I say 1 hour Sibby to busy trade. All right, Russell, let's see how well you learned your, oh, yeah. Indeed you do, Russell. Indeed you do. Now the question is, what? P1, P2. That would be P2 right through all of that. Right there. This would all be P2. That's P1. That's P2. All of that. And then P3 is right there. So you're correct, sir. That is a box-to-box trade on the hourly. It took a few days to get there, but it's there. Upside next is premium here. So this candle's been validated. You don't want to see more than the mean threshold of this candle, which is the SIBI, the very first candle to the left, which is this bull candle. We don't want to see more than its mean threshold get traded through. It's right there. This has to hold now, so you want this little support structure to close above here. Get some leverage off the high or the open, no more than the mean threshold, and keep pushing for the premium. And if those give way on the lower time frames, keep an eye on those things on the lower time frames to make sure they support the price. Just wait for range extension continuation. When you're up in the premium array and you've done the internal range liquidity hunt, look for range extension and continuation models. That's the way you'd kind of support that. Otherwise, you're just going to take a premium inside a, let's just talk about it right here. In other words, if you're in a high premium portion, you're at 70% optimum trade entry reversal expected now. So then if you're at that level, you're looking for, on a higher time frame, you hit a P2, you're looking for a reversal here, right? And if it gets above it, you're looking for a continuation to this next level. If you're paying for extreme premium up here, if we can get a body above that, and then we're looking for this liquidity above the market here. So here I'm looking for range extension, and then the range continuation model to occur above. And they have overlaps. There's redundancies in there that protect you if you're following the rules. No body above here yet. That's your next bull trap, which happens to be right in your next premium array. So if you're looking at this candle here, it's been validated right there, comes back, finds support. Wick, take the wick, split it into quarters. Strength if it stays inside that 25% level. We don't want to see it break 50%. But strength if it stays there and starts marching higher. And then you want to see a body get above here. So if that just keeps coming back down, 50% of that wick is also the top of the C. 25% just tells you it's got more strength. It's not coming back in here. We want to see that just keep marching ahead. Aiming for this level here. Keeping in mind your bull trap, mean threshold is 43.53. And there's even one more above here. This is a 15-minute. That's your 15-minute premium above those higher time frame ones. What's oil up to? Still coming lower, eh? There's basically like 3 different models that I look for internal range liquidity hunt, and then using the internal range liquidity and the premium discount boxes or my box to box trade, and looking for those for range extension and then a continuation model. That's pretty much all I do over and over and over again. Three models. On every time frame, every asset class. This is Crazy Ivan. He doesn't see you, so he continues on. 38. That's the bottom of the crazy. Finish the Crazy Ivan's turn. Now we can continue going higher. He does his look back, doesn't see you, keeps coming. There's the new high. There's the premium box on the 4 hour. We're hitting that now. Looking for 305, looking for that consequent encroachment. Take this this area right here. That's that go, no go zone right there. And I'm going to put a little trades above here, come back, found support at that, keep going higher. There's 4 data points right in there. This would be a CAM model 3 forming here now. Once we break that low, we can retrace. So CAM model 1 is just, you want to see a fair value gap form in here, come back, tag the low. That's 1. 2 would be 50% of this range in here. And 3 would be, well, now would be this whole leg. And 50% of that whole leg. So there's the tap of that 4 hour right on there. So now here's where you typically would see a swing point on a premium, the last up premium level for box to box. You could often see this just hit right off that spot and start driving all the way back down again. So now I'm going to start hunting for a reversal. It also hit the bottom of our no-go zone right there. Now I want to see if this just runs through this BISI break structure, use the breaker or the BISI to keep pushing lower, and then I'm hunting for box to box. And if it keeps going higher, it keeps going higher. There just looks like too much delicious liquidity sitting above us on that 4 hour level there. You just can't deny all that delicious candy land sitting up here. Still one more above us here. You see that? That's what they've been bouncing off of. The whole zone right there. Look at it, just, it's been holding price back. That's the hourly no-go zone. Right. See where we go from here. On the ES. Oh yeah. So ES is hitting right into its no-go zone. Its first one is max at 177. And 777, which puts you right in here, right in that 4-hour fair value gap there. 4-hour with consequent encroachment, which is what we're looking at, and NQ has already ran through that one. And we're in that no-go zone right now. And I want to see if that's that 15-minute no-go zone. I want to see some sort of rejection off of there. This would be the BISI I'd want to see form. Get your first candle below it, support it, and then aim for our Monday 5-minute first presentation. See what happens in the next minute if this stays in place. Macro is about to begin. This would be a great place to see a turn. Right up in the no-go zone, right up in the premium box. You can give us one more little squeeze and fill that in. I'd be all right with that too. Nice laser stop there, then turn around. And I will go here. Telegram's having issues today? Is it really? There's our BISI. Remember, if you're on our Telegram channel, make sure you're participating. Because if you're not participating over the last I think 2 or 3 months, I gave you kind of a leeway there. If you're not participating, we just remove you from the channel. You're not banned or anything like that. Just remove you. But getting back in is a lot more difficult. Not impossible, but definitely once you're just on the removed list, then I gotta go back in and find you and reattach you. There's 5 more gone. A lot of them have deleted their accounts. There's the premium of the no-go zone. Oh, sorry, the consequent encroachment of the no-go zone. It's on a 50-52. And then your last no-go zone is right there with the new day opening gap on the 15-minute, I think that was. The last 15-minute resistance area, as it were. Looking for that 6777. See what on your ES to see if there's a little resistance in there. I see a little pocket right here. That's a little area of interest I got there. It's my little area of interest. That's at 67.82 to 67.86. That's the top of the 4-hour. Anybody else having issues with Telegram that's on there right now? Adi, you having any trouble getting on there? Just gonna type in and see if I can get. I don't seem to be having any. No, I don't seem to be having problems with it either, Kevin. So it might be just your end. Adi's not. No. Might be just your end, my friend. Widespread internet issues. It's AI taking over. It's learning everything. I didn't think about AI as I heard this lady talking about AI, and they said it's just a massive theft of intellectual knowledge. They're stealing your intellectual property and then selling it to someone else, a third party. It's theft. Any way you look at it, AI is just theft. It just steals everybody else's knowledge, everybody else's intellectual property, and then sells it to someone else, repackages it and sells it to someone else. And I thought, I just paid for that. I just paid for someone to come and steal my ideas, build something, load it back into their data, and then keep it in their database. I'm like, wow, I just paid someone to steal my ideas. And then they sell it back to you as an idea of saying, it's our intellectual property. Wait, didn't you just steal it from everybody else's first? You just gather up every bit of human knowledge and then just capitalize on what everybody else has spent their entire lives and decades and hundreds of years or thousands of years worth of knowledge under the guise of, oh, it's all there to help humanity. There's my conspiracy theorist. Starting to sound like Michael now. Put my tinfoil hat on. All right, so still got nothing in the charts. Let's see if the no-go zone holds or the next no-go zone holds. And we have an upside of the new day opening gap again as a potential target. Still haven't got a reversal yet. We've got some nice continuations. No reversal yet, though. Back on. Issues everywhere, really, yet. Keep your powder dry, man. Protect your capital. It just feels like there's some nastiness going on out there. The predators are in the water, and there's blood in the water, my friends. So the bodies are respecting that right now. They're just sitting right on the top of that 4-hour inversion. Right there, just holding. Now I'm looking at this level and here. Right in the no-go zone. The go-no-go zone. Nice kickoff 15. Looking for the premium. Premium. Burp, 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 burp. Watch the need threshold. Just what you just banged off of there. I want to see that bull trap get eaten through and then start targeting higher. Hang in there, Russell. Yes. It's a wait and see game, my friends. Wait and see. If we did, if we did that right there, where would that put us? It's right on that 15-minute. you can see this no-go zone given way, and this is it right here. We talk about, remember in Toronto, you guys, we talked about confluence, looking for layers of multiple different time frames overlaying each other at key data points on the higher time frames, looking for lower levels to find confluence at that specific point. What confluences do you see here in this 15-minute? I'm not even interested in this one anymore. If it holds, great. I'm looking right here. If this one holds, then I don't want to see this market structure get broken. Trade below this 5-minute. Monday, our first presentation for Valley Gap on the 5-minute. Let's see if we can get a market structure shift off of that, go lower. Otherwise, I'm still looking for a run up into here. This is the time we get 11 o'clock. We get our change in direction, our reversal. So I'd like to see this get broken here. We're just hunting for any reversal. 4 hours hit right on the top. Change in direction will be here. Market structure shift will be here. This is also the 4-hour mean threshold of the breaker. The consequent encroachment is also the mean threshold of the breaker. Internet, yeah. I like the short side right now on the S. No issues on mine. Keeps crashing. Maybe they're on to you, Russ or Kevin. Everyone is, everybody is. That's why I'm hanging out, but I do like the short set us for 20 points. It's not a deeper run below the open up today. Yeah, I'm kind of torn between this level, the mean threshold, and that new day opening gap above us on the 9th, and the 15-minute no-go zone. And right now we're still looking like we're reaching up for that. The confluences of, what are the confluences that support that level? Russell? Reza? Are you on? Is Reza around today there, Hadi? Oh, you guys are short on that already. If you're short off of here, okay, I could see it a short off of that for sure. Pay yourself at the lows. Look to this order block here to hold price. Let's tap the high of it. Back and forth still. Have you got your SMT divergence yet there, Ollie? And there you have it on DAX, equal highs. Oh, the DAX finally hit the highs. Nice. Trade above it, tap it, run higher. Nice, 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 nice. That's a nice little entry right there. Look at that. Boop. Nice run higher. Rejection block and take the high. Range extension. That's the 1 hour range extension. And now you're looking for continuation model. It's a beautiful thing. When you see it, you got to see it enough times before you trust it. So there's a box to box strategy. So you pay yourself box to box and then wait. Once you get out, you scale out inside that method of take profit model 2. You scale out. You scale out there and then you say, I just wait for a body to close above it, come back, retap it, and I can get in long. Body closes above it, comes back, retaps it, I can get long. Pay yourself at the next high. Oops. Rejection block, old high, pay yourself, move to break even. Now you're in the long. Let the rest run. Let the rest run, man. That's a beautiful internal range liquidity hunt and a range extension model. And now you're looking for a range continuation model. 3 models, I tell you, they're beautiful. When you see them and they work perfectly, they are like killer. 3 simple models. And we shared those with you guys on the weekend or last week. Out of the longs. Been in this trade since 650. Good for you, Hans. Way to go, buddy. Well done. Did it hit our premium box? Ooh, aren't you happy? Did you not stay in that, Russell? If only had held it longer, dusted. Wow, nice move in gold. Look at that, 15-minute, right on the beezer. Little wick did a little damage. That's just a retrace back into this discount box. When you lose the mean threshold of that candle, once you trade through it, you lose the mean threshold of that. You go, we're running for the lower one that never got a chance to get retested here. So look at that, right back into it. Beautiful, 50%. Ran higher. There's the next premium box. There's a P2. There's P1, P2, looking for P3 up here now. So you scale out your portion in here, or scale some out. Move your way into break even now. You can stay one tick below this candle. You want to see that hold? You've paid yourself one tick below here. You don't want to see that mean threshold give way now. You want to see a body get above this whole block here. Get inside here and then start targeting that level. Look at that, still holding. That hourly no-go zone is still holding, and right on that 4 hour, it's still holding. Still holding. Oh, you got out a long time ago. Just have to trust it enough, Russell. Don't worry about the money. You're still focusing on the money and not watching. Just watch the trade, man. Don't worry about the money just yet. Just focus on the trade. Because the trade, once it just that continues to build that level for you, you'll start to find your confidence going longer, and then the money will come later. Right now, you're still focusing on the cash and not the setup. Watching right here. Watch here. Market structure shift. We want to see all this. 11 o'clock. We can expect to see a run on this liquidity here at 10:30. Nice retest here now. So if ES is made a higher high, oh, that's 1 minute. Let's look at the 5 minute. A higher high, 5 minute. NQ. Flat. ES, higher high. So there's an SMT divergence there. Has it made a higher high? And it still hasn't broken this level here though, so ES has on the 5 minute. We're back to this candle's high and open. On the 1 minute level, nice little structure shift here. Come back inside, institutional order flow entry drill for a continuation on the downside. Looking for this target to lose its mean threshold. It does. You come back into that mean threshold. You want to roll over and continue going lower. You don't want to see that get broken to the upside. Otherwise, we're looking for this premium area right here. And the potential is to get back up on top of this to continue going higher. Because this internal range run here, that's more than 50% already. So you're already at a nice discount. I think I'm wrapping her up here, boys. My back's getting sore. I think I'm going to shut her down here. Keep your eyes on it this morning. Looking for this. Nobody told me what was sitting up here or the confluences, but they're obviously not. You're obviously not too interested in them, but I'm looking at the new day opening gap, the 15-minute no-go zone, and also The rejection block on the daily is sitting right up there as well. So looking for a rejection block and then looking for a little tap in that and then the reversal. If it doesn't, it just keeps marching through, then we got continuation. So those are the things I'm looking for up there. I'm out of here. Thanks for tuning in, you guys. Keep your eyes on those upside objectives. ES. That's the little run back inside the range. You didn't get real big market structure. You just got to change in direction here. A little break, I guess you could say, is that inside this range. Change in direction here. Again, look for this bull trap to give way and then a continuation on the upside in ES. This did not give way, so we failed to go lower inside that range. See, ES ran through that order block and NQ didn't even come back and tag it yet. So kind of interesting. So there's more strength in this. It doesn't want to go to lower. So it tells me he wants to go higher still. Tomorrow is Tuesday. Wednesday's the last show, Russell. Wednesday will be the last show for a while. Anyway, but you can still find Ollie, Kevin, Russell, and Mr. Hadi on the Telegram channel. You can chat with those guys. You can still keep your community alive and chatting with each other on that. If you don't see me on here, you can still follow those traders there on the Telegram channel. They'll kind of give you their little idea of where they're looking for entries and exits. So anyway, we still got another couple of days left. So I will see you guys tomorrow, bright and early. Enjoy your day and stay safe out there.